Welcome to this current affair topic, GST of India, which is actually a confusion. Earlier, the state government has said that we will pay a compensation to the states which have failed short of in the collection of taxes for the period of 5 years. But now the government is telling that due to this corona pandemic, and it is an act of God, just now launched an act of God. Due to this act, now we won't pay the compensation for it, and they have divided that compensation into two parts, where they have selected a collection that has been done because of the imposition of GST, and another section they have done where the loss is because of the pandemic. Nobody knows from where this calculation has been made and how it has been made. So let us move forward how this GST of India is being calculated, and what are the steps taken by the government in the recent days. So moving ahead, so the whole mess is that the central government earlier it told that they will provide the compensation to the state if they fall shortfall in the collection of taxes. Okay, so the same thing is written like the GST revenue shortfall is expected to be 3 lakh crore rupees for the current year 2020. So the current data that has been expected for the GST shortfall is around 3 lakh crore rupees, and in that 3 lakh crore rupees we will see that government will divide this into two parts, where one of the compensation will be because of the economic shortfall or due to this imposition of this GST, and another shortfall will be because of the act of God. And this act of God has been recently introduced, earlier it was not there. So due to this act of God, so there is some shortfall, and for the act of God they are not going to pay any compensation, that is said by the central government. Now, and how this central government is going to repay that whole that loss is by the taking the loan from the RBI. Like RBI is known as the bankers of bank. For us, for this, we common people, we have a bank. Now for the bank, if the bank wants to take loan, so they have to approach for RBI. Okay, so that is the simple equation. So now it is like that state have to borrow money from that RBI as the compensation for the loss due to the imposition of the imposition of the GST. Now the state, like there are multiple states, so each state will have a different rate of interest if they are buying from the RBI. So there are different rates of interest. So each state there will not be equality. So because to maintain this equality, to maintain this rate of interest, what is going on, that from RBI the center will borrow the money from RBI, and it will give money to the states. So it will be like that whatever the interest rate will be applied, it will be applied to the center only, and thus the interest rate will be stable. And now the center has said that the rate of interest, like whatever the loan will be taken, it won't be added to the consolidated fund of India. Okay, so it will be added in the state fund. So what will happen, the fiscal deficit of the state will increase, and already the state financing, we will see in the next slide, that in the state financing, whatever that state development loans is SDL in the form of loan given by the states, it already have a high rate of interest, so very less investor goes to the state for any taking loan. And further, if you are increasing the fiscal deficit of the state, then it will be like directly investor will not come. That the fiscal deficit of that state is increasing, it means that investor will not come for that borrow the money and all. That is the concern with the state. Okay, so what is written, that as per the agreement, it was the central government to provide for the GST compensation up to 5 years, that is up to 2022. from 2017 to 2022, 18, 19, 20, 21, 22. Okay, so now the central government has given the option to a state to borrow the money from whom? From the RBI, and most of the states were agreed on this. Okay, the problem will occur now. So but on behalf of the state, it will be the central government borrowing from the RBI, and then it will be transferred to the state government in the form of what? In the form of trans-chain, as I have explained, that from RBI to center, and center to, it will be to state. Okay, it will be acting as a trans-chain. So why it is done? It was done to maintain that stability of that interest rate and all. So it was done because if a state individually go to RBI and borrow the money, they might be offered different amount of loans at different interest of rates or the coupon rates. Okay, so to ensure that each state should borrow the money from RBI at the same rate of interest, on behalf of the state, central government will borrow the money, and this actual borrow will, now the problem is here, this actual borrowing will be reflected in what? In the balance sheet of whom? In the balance sheet of a state government. So here is the catch, that the borrowing, actually, see, the payment, the loan that will take, the interest that we have to pay, that will be paid by the central government only. That will be paid by whom? That will be paid by the central government only. But the central government said that the loan, whatever you are taking, that will be added in the state government's balance sheet. That is the catch. And because of that, the state government is telling that it will impact our SDLs and all. Okay, that if no investor will come to borrow money and all from the state. So that's what the claim is given by the state. So this actual borrowing will be reflected in the balance sheet of the state government, not in the finance of the central government, which has been opposed by the various state government. This is the catch. This has been opposed by the various state government, that okay, you are borrowing the money, okay, you will pay that principal and the interest rate, but why are you adding this amount in the state government balance sheet? It is the claim by the state government. That is what the state government is trying to say. Okay, so it is because center was promised to pay the compensation for the GST shortfall, so the pay that shortfall from your balance sheet. So it is like that. To the central government claimed that, central government replied that okay, central government will pay, but it should be like you have to be responsible to show the people, like it will be like multiple states will come and they will say I want money, I want money. It's like that. No, if you have shortfall, it will be added to your balance sheet. So it will act as like a filter, it will act like some certain amount of restriction to that. State government should also improve from their side to earn more. Okay, so the central government has claimed also that state governments are not doing well from their side also, because they are thinking, they took that GST implementation, that whatever the loss we will see, the central government will repay us. So it means like they were kind of free, like they were not feeling challenging, they were not implementing it on their stake. They were like, the money will be given by the central government only. Okay, so that's what, to make a responsible one, to make a state responsible, whatever the act you are doing, whatever the act you will implement, the central government has imposed it. That is the statement given by the central government regarding this issue, that to make a state responsible, we are doing this. Otherwise, a state took it as a liable, that no, whatever the loss we will see, we will get by the government. But central government said no, it should not like that. You should be responsible to it also. Though the central government has stated that whatever borrowings will be done from RBI to pay for the state, this borrowings and interest will be repaid by the central government by extending the GST cess. So now the GST cess, whatever the cess will be imposed, that will be that paid by the central government through collection of the cess. So cess is something like that money is collected on the particular, like Swachh Bharat Abhiyan. If you go to the restaurant, so they will ask you ₹1 submit for the for Swachh Bharat Abhiyan and all missions like that. So that is something called as a cess. Okay, So now what is the problem for the government? Okay, so now the problem for the state government is that you are extending the deficit of the state government, that I've explained earlier, that you are extending the deficit of the state government because you are adding this into whom? You are adding into the state government balance sheet. Okay, so that is the problem by them. So you are adding this in state government balance sheet, so which will reduce the investment from the market to that state, as the risk factor will be more for that state. And this statement that as the risk factor will move, so it will be like some states will feel motivated, no, we have to do more, like we should not be dependent upon the center to get the money, to overcome the money, so we have to do from our own also. So to make that reliable, to make that responsible, state government has done it. It is a claim by the state government. Okay, so as we can see, when the state government issuing the state development loan SDL in the market, the coupon rate is already high as compared with the central government, and even after this balance sheet deficit is increasing. Even after this, there is a very low chances of someone taking SDL. Okay, so thus when risk factor will increase, the state government has to issue higher interest. Now again, more higher interest, SDL is already higher than the central government, and if the risk factor is increasing, then higher interest will be like levied on the state government. So when borrowing from the market, so in addition to this, the central government has stated that it will be borrowing more than 1 lakh crore rupees, and borrowing of the state has been relaxed by 0.5% of the gross state domestic product. So it is telling that central government will borrow extra from the market or from the any investor up to more than 1 lakh crore rupees, this one. And it has said that state government can, whatever the state government was borrowing limited, there is limitation on the state government too in the borrowing from the market. So center has said we have relaxed you from 0.5%. Okay, so it was like that earlier. Central government allowed that you can take up to 100 rupees. So now the center has relaxed that you can borrow 0.5% more. It means that now it can borrow up to 100.5 money from the market. It's like that. Okay, so since it has been relaxed, now state can borrow more than 1 lakh crore rupees from the market itself. So earlier it was up to 1 lakh crore, that earlier the boundary for the state government to borrow the money from the market, it was up to 1 lakh crore rupees, but now it has been relaxed up to 0.5%. so now state government can borrow more than 1 lakh crore rupees. But remember, it will be liability on the state government, because ultimately at the end of the day state government has to repay it. Okay, so moving ahead, so now the compensation cess. Okay, so the government of India, earlier it was that from 2017 and to 22, the government of India promised to pay a compensation for any shortfall due to the implementation of the GST. Okay, so the government of India had promised the state that the cess will be paid in case of any shortfall to the revenue collection because of GST of for the 5 years, that is from 2017 to 22. So due to pandemic, recession and the slowdown of the GST collection has come down from coming 1 to 2 years, and GST expected revenue collection will increase as per the calculation. So the compensation which should be paid from the center to the state comes around 2.3 lakh crore rupees. What is saying? See, read it again. Due to pandemic, recession and the slowdown, combining all these three factors, collection has come down for coming 1 to 2 years, like for the coming years 2021, 2022, and now whatever the GST expectation were there, GST 2022 expected revenue collection, that GST expected revenue collection will increase as per their calculation. Earlier it was like that, but now it is not like that, it is going to decrease. So the compensation which should be paid from the center to the state was around 2.3 lakh crore rupees. Okay, 2.35 lakh crore. So this, now the central government is now claiming that only a part of this 2.35 lakh crore rupees is due to implementation of GST. Now it is saying that, try to understand. See, first problem with the GST implementation is that the the profit that was calculated by the central government when the GST was implemented in the 2017, that Rahul Gandhi used to tell as the gabbar tax. So when this was implemented, the calculation that was made as a profit, it was around 14%. It will increase. It was like that they will earn more than 14% like that. But this was an over calculation. It was over ambitious. The data, that expectation that they took, it was over ambitious. That was the only problem with the GST, and that made a huge mess. That is the problem of huge mess. The expectation that was made due to the GST implementation was wrong, was the miscalculated, and now we are seeing it that actually we have not gained that much due to the GST implementation. Okay, so the issue here, now the coming to the topic, the issue here is that, see, there is like 2.35 lakh rupees is the that center have to pay to the states. Now the state that center is telling that only a part of this 2.35 rupees is due to this GST implementation, not like right now whatever the data is coming, it is a mix of GST and the pandemic. But the center is telling that yes, okay, whatever the loss is coming, it is okay, some part of it because of the GST implementation, some part is because of the pandemic, that is corona. Okay, so they calculated it. How they calculated it, nobody knows. So they calculated it and they came out with a data that the government has stated that the state can borrow from RBI to the tune of what, 1.1 lakh crore rupees, and any borrowing done from the state for the financial year 2021, the principal amount and that amount shall be repaid by the central government. Okay, so in that 2.35 lakh crore rupees, they are calculating that in 1.1 lakh crore rupees you can borrow from the market, and that will be paid by the central government. So the issue is that how you are calculating, from where you got the data that 1.1 lakh crore rupees should be paid and it is due to the GST implementation. That is the issue, that is the question. Okay, but this is what the central government has claimed. So further payment done will not be done from the consolidated fund of India as it was said, but the central government has decided to extend the compensation cess GST for 2 years, and any collection done in the form of GST cess will be utilized to repay those amounts that come as a compensation cess. So now how this economic is going to revive due to this pandemic issue. So how we are working on this, this is the problem right now, this corona pandemic. So the context is like, after nationwide lockdown, normalized power consumption patterns and improved GST collection have been indicated of the economic recovery. So, and the article analyzes that this is an indicative of sustainable recovery or just an expression of pent up demand combined with the India's festive season spending. What is this? We will see in the next slide. So basically it is telling that how we are working on it, this recovery of this economic pandemic due to this pandemic, how the GST has fallen down, how the tax collection has been fallen down, most of the industries were shut down, nationwide lockdown was there. So which industries were impacted? Tourism sector and the medical sector have felt a very high growth even in their history. It was not like that. So they were working very high in the medical field, the improvement was there. But in the tourism sector, in the industry sector, in the manufacturing sector, there was a decline. In the automobile sector, all these things were declined. So we will see in this slide, so how this economic revival will be done. So the first we will see the pharmaceutical companies and the chemicals, these areas. So everybody knows this sector has seen a very high growth and high potential. Even it was on demand that at last America demanded the tablets from India. So the sectors such as pharmaceuticals and the chemicals, food, beverages, tractors, two-wheelers, consumer durables have been performed well in this corona pandemic. Okay, but the sectors like travel and tourism, construction and the real estate and the retail are still struggling, but there has been some improvement in the retail sector, but has been limited to the high street, and stores are not at regular shops, which account for a very large shares of retail business. So it is like that Retail business have been improved, but it has been impacted. The most of the sector like tourism sector, travel sector have been impacted. Even right now in the current news, the corona cases are increasing at a very high pace. And in the recent news, it has been said that by the February, there is a chances of getting that vaccine to the front end worker from the medical field. So we will see in the coming time. So the three important employment intensive sectors, travels and tourism, construction and real estate, retail, and struggling to cope up with the disruption caused by the pandemic induced lockdown. So they are struggling, and this had a detrimental impact on the employment number of the sector. So most of the people had gone unemployed also. So this is what it is telling about, that how we have to revive. So pharmaceutical companies, sectors, and the chemicals companies, they are performing very well. Two-wheelers are performing very well, two-wheeler sectors and all. But if you go for the high vicinity, that four-wheeler vehicles, tourism sector, travel sector, construction, real estate, buildings, manufacturing and all, these have been impacted a lot. So the new thing that is emerging right now, the work from home, that is the new things that we saw, but now it is a normal situation, work from home. The new initiative that we have to work from anywhere. Right now you're working from home, but it should be like that, work from anywhere. So this is a new norm. This should be a new norm that will come. So the loss of work or reduction in the salaries income would have a negative impact on the disposable income of the people and would lead to a vicious economic cycle. Okay, so these are the sectors where we have to work upon. The sectors that are working well, left that part, but the other sectors that we have to work on for the revival of the economy, and the government should do. So what are the steps should be taken by the government? So the government have to increase the expenditure. How we will revive those sectors? So the revival of the sector can only be done by the increasing of the government expenditure, or by pushing the money, by the pumping the money in the market. How? Like greater loans should be available to taken from the loan and taken from the banks and all. Okay. So what are the issues still persisting? So India continues to register very high COVID cases on daily basis. Thus there will not be any certain or complete confidence regarding the normalization of the economy, because right now again Supreme Court is instructing with the Delhi government, and it has asked, tell me what you have done and what you are doing for the corona pandemic, and the number of cases has been increasing. Right now in the today's scenario, today's state, it is 6,000 per day. The cases have been, new cases have been come in the Delhi. Similarly, Supreme Court has asked for the Mumbai also, that what are the things you are doing from the corona pandemic. So it is like the cases have not been stopped, and it is still coming in a good number, in a very high number. Okay, so there was also the issue of the financial crisis in the economy, given that banks were not willing to lend due to the high NPS. Before the corona pandemic only, our economy was hit. Our economy was at slowdown, and after that, and there is a huge number of NPS. So the banks are telling that we are unable to give loans because we have a huge number of NPS. So we have to clear that NPS also, so that bank should be able to give that loan. After that, selling those non-performing assets and all. So the pre-existent signs of weakness in the economy would have a marked impact on the economic recovery process, and there has been a very little support for the stressed sectors by the government. Like the RBI, Reserve Bank of India, one-time restriction for the state firms may not be sufficient for the distressed companies. It is like that. During pandemic, it was said that we are stopping you, that for that period of time you can't, the loan that you have taken, no need to pay the interest and all. But after the date it was given, like 31st August was the date, after that, at the end of the day of the loan, the person has to pay the loan, the principal amount plus the interest, and further whatever the interest have been added. Okay, and the situation is like that, the most of the people have went unemployed. So that is the problem. It is saying that, it is telling that the RBI should have come up with a new scheme. It should not be like they have implemented once, India did that, and the problem has been solved. No, come up with the new scheme with so that the distressed companies should be revived and so that our economy will run. Okay, so that is the problem. So what is the way forward? So the government should reduce, as I've said, government should increase the expenditure or reduce the tax. Both are the same case. So the government should reduce the tax rates on these commodities to help the economy, which will provide an opportunity to reform the discrepancies in the GST system. Okay, so it is like if you reduce the tax, if you cut the tax, okay, what will happen? The businessman will have a lots of money with them. Okay, and what businessman will do? Just think with the businessman perspective. Businessman doesn't store the money in their saving account. If they have a money, they will directly invest it in the market as the new form of business or whatever else. But if they have a money, they will invest it. So that's what it is telling, that if you reduce the tax rate, so it will help the businessman, it will keep the businessman will have lots of money, and ultimately this money will be pumped in the market. So this will help in reviving the economy. Okay, so the government should settle its large outstanding dues to a small and large companies. If you have any dues and allowed, so government should settle these large standing dues, including from the public sector companies and the state governments, which would be a very direct and immediate way to put liquidity in the market. Pumping in the money, this will help in, like if government will involve in the settling up of all the dues. So now the government should shed its fear of credit rating agencies and must come out with a substantial spending plan, particularly for the stressed sectors, which should help generate demand through cash transfers. It is telling that just now for this time, government should just avoid the rating system. Various companies used to rate our credit system of Indian system. So it is telling that just for a short period of time, government should forget this. Government should delete this credit system rating agencies. Government should not bother about what the credit system will rate. We will see it later. Right now, we have to revive the economy by just pumping the money or the stressed, helping the stressed sectors and all. Forget about whatever the credit rating agencies will give. We will see it later. If they give bad rating also, if my economy is getting revived, it is okay. Give me bad rating. Okay, that is what it is trying to say. So investment in the infrastructure sector should be prioritized. Whatever that sectors will have. Agriculture is working well, but the government should identify which sectors are prioritized sector, and in that manner the investment should be done. Though this investment may not show an immediate impact on the ground, it is true, like if the investment come in the, let us suppose, in manufacturing sector, so manufacturing a product, then selling to the wholesaler, then selling to the retailers or the consumers, then retailer will sell to the consumers. So it will take a lot of time, but we have to identify this is the only way to run the economy. Okay, so to show an impact on ground, it can be definitely proved to be productive in triggering long-term growth. $1 trillion needs to be made in the infrastructure sector if India need to grow it rapidly. India has one of the poorest infrastructure, so it is expected, it has been calculated that up to $1 trillion is needed in the India's infrastructure. And in the infrastructure development, it will create what? It will create multiple jobs. Okay, that is what it is trying to say, and it will help in reviving the economy. So creation of jobs will later, but for the infrastructure, when the infrastructure development will be there, labors will be required. So for that, jobs will be created. So the next driver of the growth should be the rural areas. Need to drop rural to urban migration, so that pressure on urban areas will also be dropped. So it is telling that, as we have known, that due to this pandemic, lots of the people have migrated to their home, and those people that working as a laborer in the cities, metropolitan cities are all, they are from they are from rural areas, like from the states of Bihar and UP. So it is telling that government should do those infrastructure development in their areas. They should get the jobs in their own areas. So what happened? The migration will stop, and the load on the urban areas will also decrease. Okay, so investment in public health system should be focused upon, such as investment apart from helping meet the immediate health sector needs will also benefit society in the long run, and the structural issues need to be addressed quickly, which could involve easily the financing sector issue, reforming the power sector, and optimizing government regulation to incentivize the entrepreneurship. Okay, so that's what from the GST and the economic revival part. So I hope you have understand this lecture. Please like and subscribe. This is a new channel. I need your support. So your subscription is a form of payment for me. So if you have any suggestions, if you want any on-demand video lecture, please feel free to ping on my Twitter handle. The link of my Twitter handle is given in the description section. Okay, thank you.